meet certain requirements, you will have the chance to refinance at lower rates, which could save you hundreds of dollars a month.
The president launches a revamped mortgage relief program, changing a program that many had labeled a failure. Eddie Aruza and his panel look at so-called underwater homeowners in the Chicago area and how the new program might help them. But first, Eddie Aruza and the latest federal program to help struggling homeowners. Eddie.
Phil, that program is actually a 2.0 version of the Home Affordable Refinance Program, or HARP. President Obama unveiled the new, looser guidelines for it yesterday. The original version was launched by the administration in 2009 with some very big goals. It was supposed to reach millions of American homeowners struggling with their mortgages and declining property values. But that earlier program did not get to as many homeowners as officials had hoped, leading some to call it a failure. So how is the new version different, and how will it impact so-called underwater homeowners? Here to help answer some of those questions are Ed Jacob, Executive Director of Neighborhood Housing Services. That's a community agency that helps Chicago area residents with housing issues. And Stephen Kalk, Chief Executive Officer of Chicago Bancorp, an independent mortgage banker. Welcome both to Chicago tonight. Ed Jacob, give us the main bullet points of this new version. How is it updated and different?
The biggest change with this program is that it allows borrowers who are underwater, who owe more than 125%, or underwater by that amount, allow them to refinance on the mortgage under this program. There's some complications with the program, but overall that's the biggest important change, is that people who are underwater by that amount now can refinance where they weren't able to before.
Before, you had to be 125% or under, well, 25% over your mortgage, your house payment.
Correct. Now, a lot of people who have been hit with the declines in property values, who have been paying consistently, and that's an important part of this program also, is that people need to be current on their mortgages. But if they're current on their mortgages and values have been declining, and that's what's prevented them from refinancing, this will give them the opportunity to do that.
Stephen Kalk, what is the role of banks in under the HARP program?
Well, I think what's critical is that home lenders nationwide, including the Federal Savings Bank and Chicago Bancorp, reach out to homeowners and educate them on the opportunity to refinance, take advantage of this tremendous program to reduce the financial stress in their household and make lower mortgage payments.
As we all know, banks haven't been always too popular, and they're probably less popular now during this entire housing crisis. And refinancing, when people come to you to refinance, even though interest rates are at an all-time low, what do they need to qualify, especially if they are struggling?
Well, under this program, which makes it so unique, and in fact, I think it's what makes this program so exciting, depending on the details that are worked out here by the federal government over the next month or so, is they simply need to have made their mortgage payment on time. Now, as rates have continued to decrease over the last year and a half, anyone who has a job and can make, not only has the ability but also the propensity to make their mortgage payment, has an excellent opportunity at refinancing to these record low rates.
Ed Jacob, why was the previous version of the program a failure, as some is calling it? Did you think it was a failure?
It was disappointing, I think. And I think one of the challenges was that the way the original program with HAMP and HARP, there's every acronym under the sun for these sorts of programs, it was designed to assist people who were in poorly written loans, when they had readjustments, when they had exotic loan features, things like that. What has really driven the foreclosure problem and the challenges that we have working with borrowers who are delinquent is unemployment, is loss of income. And that's the new change that we've seen. We've seen a different distribution geographically of the people who are coming into neighborhood housing services for assistance, and it's really being driven by the fact that they've had job loss, and that's the biggest challenge we face. How do you modify someone's loan to an affordable payment if they've lost their income?
When I did this story and visited neighborhood housing services a couple years back, when everything was tanking, foreclosures were going through the roof, and underwater home ownership was skyrocketing, what I heard from you guys was that it was a nightmare working with banks because there was paperwork that was being lost, they were not being responsive, they were not being, at least, if not concerned, at least hopeful for a lot of these homeowners. Has that changed? Has it improved?
I think we've seen improvements. There's still room for more improvements. Certainly on the paperwork side, we've seen improvements. Back then, you heard the horror stories, and other people heard the horror stories of information being faxed into the servicer for a loan modification. those papers being lost, somebody needing to resubmit the entire package. I think we've made improvements. Certainly technology has assisted us in the improvements where we have online portals. We can submit those documents online. We're getting decisions typically much quicker than we did in the past, where before we wouldn't get decisions for 6 or 9 months on whether a modification was available to someone. We're getting those decisions more quickly, and if we can't get a modification, that allows us to move on to plan B or C more quickly. So there's still room for improvement.
And where's the improvement? What do you see that needs to change?
I think that just the responsiveness is one thing, that people are able to do that. We still have some transitions where people, if they're through the HAMP program, they're getting a temporary mod and then converting that to a permanent mod. I think there could be some improvements there. But in general, I just think the timing, the turnaround, as servicers have staffed up for this, and I think there's been more pressure on them, certainly from the general public and the federal government, to be more responsive. Let's get a decision quickly. The problem is if we don't get a decision quickly and if this goes on, it just muddles the housing market. We're slogging through a difficult market. As properties enter the foreclosure process, they end up sitting vacant for a long period of time here in Cook County, and then the person down the block who's struggling to pay their mortgages is looking down, seeing the vacant building down the street and saying, should I hang on or not? And it's just cycling downward.
Stephen Kalk, there is one, being underwater is one thing, but still maintaining your mortgage payments. Not being able to make your mortgage payments and facing possible foreclosure down the road is something completely different. But there are some folks out there who think that if they don't pay, that they might be qualifying for some of these programs. That is incorrect. Isn't that right?
That is incorrect. In fact, you know, we spend a tremendous amount of time, money, and effort educating home buyers, being a specialist in first-time home buyers and veteran home buyers. We spend a ton of our time educating folks on the importance of making timely payments. Making those timely payments on your mortgage opens up many, many doors of opportunity to lower your payment later. So when we run into a situation where someone has received bad advice like that, the first thing we do is try to get them back on a track to fix that credit, put themselves in a situation where they can properly refinance and permanently lower the cost of their housing.
So walking away or not making payments does not help in any way. It actually, obviously, it would seem intuitive that it would hurt, but the myth out there that it might help in refinancing or modification of a loan is not correct.
Eddie, that's an excellent point. You are absolutely spot on. It's absolutely critical that homeowners understand that if they make their mortgage payments, so many more people can help them. Go to your local community lender. Ask them what is required for me to take advantage of these lower refinance opportunities to lower my mortgage payment. And the other piece is, you know, when we talk about this new HARP program, if folks do and have made their mortgage payments on time, and now we don't have to worry about the fact that their home value has decreased and they're underwater on their mortgage, but they want to stay in their home, this program could potentially help us. Now, the devil's in the details. We're hoping that over the next 4 to 6 weeks, we'll get an understanding of just how easily we can roll this out to the public. But this really solves the challenge of the moral dilemma of making your mortgage payment or not making your mortgage payment. This program actually rewards good behavior, rewards the sacrifice of folks who struggle to make those payments on time.
And Ed Jacob, as far as numbers are concerned, there are a lot of folks in the Chicago area. The number is, I think, almost identical to the nationwide figure, who are underwater. Isn't that correct?
Yes, it's a little bit higher in the city of Chicago, about 25% for the metropolitan area, probably about 30% in the city of Chicago, borrowers who are underwater.
And the foreclosure rate, the numbers that I'm seeing are going down, but those numbers don't tell the whole story. Isn't that correct?
It is. We see quarterly, we see monthly new foreclosure filings. The Realty Track numbers that we see include everything through that foreclosure process. You got to look behind the numbers. Sometimes that number of new filings is down by banks, but recently that's because of the robo-signing issue, and they were making sure that they had their paperwork order before they filed. So sometimes you'll see a decline. Be hopeful there, but you got to recognize what's behind that number, what's really driving that number.
There's another program called the Hardest Hit Fund. Tell us about that.
It's a new program. Actually, 19 states who had higher unemployment, and Illinois is among them, are eligible for this program. Dollars came down from the Treasury to the Illinois Housing Development Authority, IDA. They piloted this program for a couple of months and rolled it out statewide, working through nonprofit housing counseling organizations last month. They've already received about 15,000 applications for this. The main thing with the new Hardest Hit Fund program, which is different from HAMP, different from other programs that existed in the past, is that it really recognizes what's driving driving the foreclosure problem and the delinquency problem now, and that is loss of income or job loss. So this is a program specifically for households who've lost 25% or more of their household income. And what it will do is provide some assistance to catch up on their mortgage, as well as a partial mortgage payment. Then the borrower continues to make that other partial payment to the servicer over the course of about 18 months. And so it allows somebody to get back on track, and then hopefully recognizes the fact that they may not find a new job in a couple of months. It may take a little bit longer, but it recognizes the change and the reason for delinquencies that we're seeing in the clients.
So it actually helps them with a little bit of money, a loan,
yes,
that they may or may not have to repay at some point.
Typically it's deferred or forgivable, and it would be forgiven in the future if they're able to stay in their home and maintain their payments and get back on track.
As far as the HAMP or HARP program is concerned, it is run by an agency that some do not have a lot of faith in, and has been criticized for, to put it gently, being inept. Tell us about that agency, Stephen Kalk, and what you think about it.
Well, I personally think that the Federal Housing Finance Authority, as we know it, the FHFA, is filled with some tremendously talented people.
Which is not the FHA, we should point out.
No, that is not the
completely
Federal
separate
Housing
agency.
Administration. The FHFA, the Federal Housing Finance Authority, are the conservators for Fannie Mae and Freddie Mac. These folks are working very, very hard to both safeguard taxpayers' money and also set up programs and governorship for the programs that are offered by the government-sponsored agencies. As government-sponsored agencies, there is an implied guarantee by loans that are secured by those organizations. And as a result, if the folks at FHFA will reach out to community lenders like Chicago Bancorp and the Federal Savings Bank, get direct feedback, are willing to adapt as we find flaws in the program, and they have been reaching out on a community level, and I'd like to see them to do a lot more of that, to get that kind of feedback from the streets so that we can continue to improve and refine these programs. It will be even more effective on a go-forward basis, and I think we'll achieve the goals that the current administration is trying to achieve.
Do you have faith that they will keep reaching out and improve?
I not only have faith, I have a tremendous amount of hope, and will volunteer my time to do so.
I think, Eddie, it's another tool in the toolbox. We've got to look at this as a continuum. There's some people who are current on their mortgages but underwater. Here's a tool that can help them. There's another program in HAMP that assists people, or hardest hit people who are delinquent, and what's the reason for that delinquency. The more tools we have in our toolbox to work with people, the better off we are.
That's an excellent statement.
Give us an idea of how many people you're helping these days and what their issues are.
We've assisted about over 1,500 households in the Chicago area over the last 2.5 years get into loan modifications. And again, I think people thought initially a couple years ago this was really a problem that was just for certain neighborhoods in the city of Chicago, south or west side neighborhoods. And again, as I said earlier, we're really seeing that this issue and this challenge crosses city boundaries, crosses metropolitan boundaries, and crosses income boundaries.
So what else should homeowners who are either struggling or are falling behind or are not paying should know at this point?
I think the point that was mentioned earlier is if you know you're going to have a problem, act sooner rather than later. Don't wait. The sooner you act, the more options you're going to have. A second thing would be avoid scams. Be careful out there. Anybody who says they guarantee you that they can modify their mortgage, they guarantee that they can get you out of your mortgage, that should be a sign that you should walk away.
And Stephen Kalk, how many of your loans end up going back to Fannie and Freddie?
Approximately 97% of our loans are sold, so well over $1 billion annually are sold eventually to Fannie and Freddie, securitized by those through aggregators or servicers.
Given the stability question surrounding both Fannie and Freddie, is there a concern there, either on your part or should the public be concerned?
Well, it's certainly my hope that the government and the FHFA will do everything possible to keep those organizations in place, to guarantee liquidity in the marketplace. Without that liquidity, without that ease of ability to create security so that we can lend money, do mortgages as it were, we could have some real problems, certainly some terrific economic problems heading potentially towards a double dip, and we want to do everything we can to avoid that.
The future of Fannie and Freddie is going to be a key housing policy issue in the coming years, so there's got to be a role. As he mentioned earlier, without them in the housing market to backstop, we're going to have a double dip.
All right, we'll see how this new version of HARP ends up working out. My thanks to Ed Jacob and Stephen Kalk. And you can learn more about the Home Affordable Refinance Program on our website, WTTW.com/Chicago Tonight. Up next, making sense of of new prostate screening guidelines. Please stay with us.
This evening's presentation of Chicago Tonight is made possible in part by ComEd.